How is it going, traders? Yes. I'm so excited to be back on the screen. And very shortly, we'll be talking about BTC. How we buying, how we selling. Because why? A whole lot of misinformation and conflicting information is going around on the news channel. BBC is saying something else. Yahoo Finance is saying something else. CNN, Bloomberg, they're all saying something different from one another. But what is the technical analysis actually saying? Because regardless of where you're getting your info from, you need your fundamentals to actually align with your technical analysis so you don't expose yourself to premature entry or you don't expose yourself to a crazy risk factor. All of this will be discussed on today's episode when we break down BTC, right? So are we buying? Are we selling? You get to find out on today's episode of my Forex Weekly Insight on Traders Advocate. Sorry, I didn't introduce myself. My name is Bestman Depo Kelsiamaki. I'm a Forex trader with 10 years trading experience, and I bring a whole lot of experience to you guys for free. The least you can do is smash the subscribe button, the bell notification, so we can start breaking this pair down and see how me and you can actually find tradable opportunity if there is. But if there is none, we should sit on our hands and allow the market to decide so we don't blow our account. Peace and love. I'll catch you guys in my off that screen. Peace and love. Alright, so in front of us we have BTC and we'll be breaking the chart very shortly. Before we start, please do smash the subscribe button, the bell notification so you don't miss out on our subsequent video. I'm going to give you 5 seconds to do that. JEXU. Alright, thank you for actually smashing the subscribe button. Alright, let's break this down. BTC is bearish. That's been bearish since last year November. We pretty much made money from all of these bearish move down to this area, but we came into $63,000 per coin and we stood from here. We pretty much consolidated around this area for a bit before breaking the bearish trend line. So we had this bearish trend line violated. A break in trend line is not a change in market structure. Trend lines are technical tools. They mark out potential areas of price reversal. So price breaking out or above or below a trend line just means that we have an immediate trend moving against a major trend. So most of you, once you see price take out a trend line, immediately you say change the market structure, changing trend, and only for price to start pushing up or pushing down a little bit and comes and reverse and comes and violates your stop loss, and you say trend line don't work. But you fail to understand that trend lines are technical tools. They mark out potential areas of price reversal. So price breaking above a trend just means we have an immediate trend moving against a major trend. And in this case, we've breached this trend line and we pretty much ran into this area, and we pretty much looks like we want to reverse to continue with the major trend. This area is an area you don't want to mess. It's not a major area of resistance, but it's an area you don't want to mess with. If you look, price has reacted to this area in the past before. Price broke above it, came back, retested it before actually pushing all the way to the upside, and currently we are doing a retest of this area. Alright, on the daily time frame you can actually see we form what they call a double top. This is the first top and this is the second top of the double top are bearish reversal sharp pattern. They have the probability of reversing a trend from being bullish to now being bearish. I think at the game, double top are bearish reversal sharp pattern. They can reverse a pullback to continue with a major trend. They can also reverse a major trend from being bullish to now being bearish. This double top is now telling us this pullback or this immediate trend wants to reverse to continue with the major trend, which is bearish. This is a double top that occurred on a key level on a higher time frame, and this double top also occurred on a higher time frame. So the higher the time frame, the higher the probability of the sharp pattern playing out. Alright, you see the sharp pattern, you see the double top very clearly on the 4 hours. This was the first stop and this is the second top of the double bottom. This area I marked with the purple bar is the neckline or shoulder line of the double top. I'm pretty much violated this intraday. The intraday bearish trend has pretty much been violated, and we are currently pointing down. Not only have we violated the intraday bearish trend, we've also broken below the trend line. So what does this mean? It means we want to reverse to continue with the major trend, which is bearish. So at this point, our mindset should be wired a reversal to the downside. So is it time to start selling? No, it's not time to start selling, although we've pretty much broken below the shoulder line or the neckline of the double top. Please, I beg of you, you can't be a follower of this channel and you sell at the breakout. Never sell at breakouts. Wait for price to break out. I've said it before countless times in this channel. I'll say it again. Wait for price to break out or break below the neckline of the double top. Right? Don't sell at the breakout. Wait for price to break out, then pull back. Okay, then pull back to do a retest of the neckline or shoulder line, regardless of what you call it. Wait for you bounce around this area. Wait for your bearish candlestick bounce. If you can't connect the waves from the 4 hours, then I hardly narrow down to the 1 hour time frame to connect the waves. But in this case, you can go on the 1 hour time frame to, so we can draw our counter trend line. Why so? Because we don't sell at support and resistance. So wait for a bounce here, then draw your counter trend line. So once price sticks out, breaks up below your counter trend line, then we can start selling. This area, when price comes into this area, please, I beg you, lock in 50% of your position, then push your stop loss past break even in anticipation that we'll roll all the way into this level. Though this is our potential level, right? And this is the level that price broke below. Price had issues broken below. The first time we tried, second time we failed, tried again we failed, tried again we failed, start pushing all the way to the upside. So if we take out this level, we are definitely coming here. Once we come in here, I'll be using a trade stop, very close to the market, because you can come in here and start reversing and start pushing all the way to the upside. It is possible. So once we come in here, if I don't close out my position entirely as profit, I'll be using a trade stop, so I don't give back what I've made to the market. So the rule of engagement is wait for you bounce, wait for price to pull in here for you bounce, draw your counter trend. At the break of your counter trend, you can start selling all the way to the downside. Our first level target will be here. Once price comes in here, we'll be locking in our first position entirely as profit. We will then push our stop loss a little bit below where we stood from. In anticipation, our second trade will get to our overall target, which is somewhere around $64,000 per coin. But I'm also thinking maybe we might actually have maybe we experience some difficulty around this area. If we come into $71,000 per coin, I'll be using a trade stop. So if you break out from here and we start pulling all the way down here, I'll be also using a trade stop, because it's also possible we can come in here, form a base around there and start pushing back to the upside. And if you look at this properly, we've also had interactions with this area before. We rejected from around this area, we also rejected here, we rejected, we pulled back, we broke out, but we couldn't sustain it. We did a retest, we start pulling all the way to the downside. So price taking out this level, once we come in here, we might actually experience some difficulty breaching this area. The worst thing you can do is to be in a lot of profits, only to price to come into an area of concern because you can't see it, or you just ignore it. You will see your profit get wiped out, and your trade now turns from blue to nowhere. At the end of the day, you have your hands on your head. You don't want that to happen. So once you come in here, please lock in 50% of your position. Start pushing stop loss past break even. In anticipation, we get into $63,000 per coin. All right, that's it for today's episode. I just want to talk about BTC on today's episode alone. Once again, my name is Bestman Makri, and I hope this video has really been impactful and also educative. If it has, please do smash the subscribe button in and drop a comment below. I'll catch you guys in my subsequent video. Peace and love.